13,000 normal people are about to wake up with generational wealth. They are about to become so rich that their grandchildren will never have to work a single day in their lives. And they did it simply by taking a job at a rocket company and forgetting about some stock options in a drawer. Soon, that drawer will turn into a massive ticker symbol on the NASDAQ. This is officially going to be the single biggest initial public offering in the history of the entire planet. The only question is whether someone like you can actually grab a piece of this fortune. Or will you just sit on the couch and watch other people get rich on the evening news again? The good news is that this specific event is structurally completely different from anything we have seen before. I am going to reveal exactly 4 ways a regular person with a normal income can get involved. But you must pay close attention, because the 4th method is a hidden backdoor that almost nobody is talking about right now. For 15 years, Elon Musk swore he would keep his rocket company private to focus on getting humanity to Mars. He completely refused to let Wall Street analysts scream at him about quarterly earnings. But that promise is now officially over. The paperwork is filed, the roadshow is wrapping up, and the price is set at $135 a share. They are going public at a mind-bending valuation of $1.75 trillion. To put that into perspective, this single company is now worth more than the entire gross domestic product of Australia. It is more than doubling the previous record for the largest IPO ever recorded in financial history. And here is the exact reason why you need to care about this. They are reserving an unprecedented 30% of this offering specifically for regular retail investors. Not just for giant hedge funds, not just for Goldman Sachs billionaires, but for normal people using regular brokerage apps on their phones. However, you need to understand how the insiders already made their money before you blindly rush in. In just 18 months, the value of this company multiplied by 5 times. Every time that valuation jumped, the insiders quietly sold off slices of their equity for massive profits. There is a senior engineer who walked onto the factory floor years ago, making less than he could have at Boeing. Today, that exact same person is sitting on a staggering $4 million in stock. Even the company's early massage therapist became a multi-millionaire just by accepting equity instead of a larger paycheck. But the people who truly hit the absolute jackpot were the early venture capitalists. One firm wrote a $20 million check back when the company had failed 3 rocket launches in a row. That single investment is now worth over $19 billion. That is a 62,000% return on their money. It is truly sickening wealth. So how do you and I get anywhere near that room? Let us break down the 4 exact doors you can walk through today. Route number 1 is requesting shares at the actual IPO price through your standard brokerage app. It sounds incredibly exciting. You might open your phone on the morning of the debut and see a button asking if you want shares. But here is the brutal catch. The demand will be so overwhelmingly biblical that the supply will completely evaporate. You might ask for $1,000 worth of stock and only receive $50 worth of crumbs. Route number 2 is completely straightforward but incredibly dangerous. You simply wait for the stock to start trading and buy it on the open market like everyone else. There is no gatekeeping and no allocation lottery to deal with. But you will be buying at whatever frenzied, overhyped price the desperate crowd sets on day 1. Excited buyers routinely overpay on the first morning and then watch the stock collapse by 20% a few months later. Easy is almost never the same thing as smart. Route number 3 sounds like a secret club for James Bond villains. It is the pre-IPO secondary market. You can theoretically buy shares directly from early employees who want to cash out right now. But this door is completely bolted shut by the government. To legally participate, you must be an accredited investor with a massive income or a net worth over $1 million. If you do not have that kind of wealth, the government literally bans you from taking this route. Even if you qualify, the pricing on these private secondary platforms is dangerously murky and completely unregulated. Which brings us to route number 4. The one strategy one promised to show you at the very beginning of this video. This door is wide open to everyone right now. You do not need $1 million. You do not need to win an allocation lottery. You can get exposure to this historic rocket company by buying publicly traded entities that already own massive pieces of it. And the smartest, cleanest way to do this is almost laughably boring. Back in 2015, Google's parent company Alphabet invested $900 million into this space startup. Today, that stake is worth roughly $100 billion. If you simply buy shares of Alphabet today, you are quietly buying a sliver of that rocket company. You get it wrapped safely inside one of the most profitable tech giants in human history. Best of all, you pay absolutely zero speculative premium for the privilege. There are also specific closed-end funds you can buy that hold shares. But you must be incredibly careful. Some of these funds trade at massive, irrational premiums right now. People are literally paying $60 to buy $20 worth of actual underlying assets. That is not investing. That is just paying a foolish tax for your own blind enthusiasm. Now I need to give you a harsh warning that the internet hype machine desperately wants to hide from you. The people most likely to lose all their money on this IPO are the biggest fans of the company. Loving a product and making money on a stock are two entirely different skills. Confusing those two things will destroy your portfolio. Right now, this rocket company is being valued at over 100 times its total revenue. It is essentially losing billions of dollars on paper due to aggressive expansions and loans. Top financial analysts are bluntly warning that the company is currently significantly overvalued. They explicitly state that patient investors will get much better chances to buy it cheaper after the dust settles. You do not have to do anything on the first day of trading. Let the desperate buyers overpay. Wait for the initial hype to die down. Keep a close eye on the calendar for when the insider lockup period expires in about 6 months. When thousands of insiders are suddenly allowed to dump their shares, the price almost always drops. That is exactly when a patient predator strikes. If you absolutely must buy in, treat it like the high-risk gamble it actually is. Never put more than 1 or 2% of your net worth into a single speculative bet. If the stock triples in value, you will still have a fantastic year. If it completely craters, your life will not change and your rent is still safely paid. This is the ultimate secret of asymmetry. Small bets with huge potential upside and completely survivable downside. Please watch out for the army of scammers who are about to flood your social media feeds. No stranger on the internet has exclusive access to a secret pool of cheap shares just for you. Real access goes entirely through heavily regulated, reputable brokerages. For your entire life, the door to this kind of generational wealth event has been locked. Today, that door is finally cracked open. The real skill is not just walking through it, but knowing exactly how to survive the trap waiting on the other side. Be patient, be ruthless, and let the market hand you the fortune you deserve.